Alright, it's gonna be a little quick one today. Little quick one today. Let's see what FOMC is about to do. Okay. So we got gold's just been ranging, which is anticipated. We got NAS100, which has kind of just been ranging too, pushing up from this 4-hour support as well. One sec. Alright, so 30 seconds, we're expecting a rate drop of 0.25% or 25 basis points. So I've been thinking gold is going to buy today. Based on this price action, I really think gold might just whipsaw. Need to see what Jerome Powell's going to say as well. So we've got to wait for that in the next 30 minutes for the actual meeting. Alright, so what do we get? I'm expecting a push up, to be fair. Oh, gold is pushing. What's wrong with this thing, man? There we go. I don't know what's going on with Oanda, but Oanda never does what it's supposed to do. We've got Nas is pushing too. Yeah, man. Maybe we can jump in. Maybe. I would love to. I'd love to be able to. What's GJ doing? GJ is whipsawing. That's probably not even the right thing. Check this one out. Okay. So everything has just been ranging. I hope we don't stay in this range, man. Benny, what's good, man? What's good? Alright, gold. What's gold doing over here? Gold is jumping up and down. Where did gold get to? So gold got to 42.12 on my broker. It's not bad. Not bad. Now Nas is coming back down. Gold buys as expected, but will it continue? That is a good question. That is a very good question. I mean, so we got the decrease as expected. Now we just gotta wait for JP to talk that shit in 30 minutes. I want to see what a 15-minute candle does. See if we can get like jumping on the 15-minute. Okay, so Oanda's caught up. That's good. Took his time with it. That's where all my markings are. Oh, gold came right back down. Oh, please don't continue to range. It's so boring. Ranging is so boring. NAS came right back down. So NAS is kind of looking like gold. Do you know what I mean? We've had this range. We pushed up to a resistance and then dropped. Literally the same. You know what? Let me do this. That's not the right one. I think it's this one. Yeah. Don't they look the same? They look very similar right now. Twin charts. Word. And GJ ain't doing shit. Let me line up Jerome Powell. So it's called the Federal Reserve. Live. Where's the actual? So I'm just trying to find the stream for where he's talking.
Even spending and investment decisions by households.
That's not it. Someone in the chat said egg prices. There we go, Federal Reserve. All right, cool. Yeah, we gotta wait half an hour for that, but that's as expected. Oh, look at this push. This support was really holding on gold, wasn't it? This was really holding. Right, so now what we're looking for is we're looking for Jerome Powell to talk about the state of the economy and the rate of future hikes. So if he says, you know, we're going to continue reducing rates, maybe XYZ amounts per year, that's a good look. If he says, you know, the job market is still too strong, it's not slowing down, then we might see some sells. In fact, but I mean, I was looking for these buys today on gold, just didn't really know where to get in. But I knew that once the rates will drop, was going to get a good push. Alright, what's the 15-minute candle at? I wonder how far up gold wants to go. Our first target is still 42.19, 42.17. Yes, sir. Rosie, what's happening? You might hit TP soon. I mean, the way gold is moving, I think so. I was trying to, you know me, after news, wait for a little 15-minute candle. Jump in on the next 15, but gold is left me in it. It's left me. So this was my first target for today. Look, beautiful continuation pattern on the 4 hour. Yeah, there we go. Gold is gone. Damn you, gold. Damn you, gold. What a beautiful looking candle. What a beautiful looking candle. Right, so we're at Asian highs. If you can get a bit more of a push, I think this gold keeps on flying, man. Oh, so respecting Asian highs. Little drop back, little dip. Little dip. And this 4 hour resistance. Ooh. Waiting for this 15-minute candle to close. But then, look, oh yeah, we're gonna keep pushing, aren't we? Not feeling that all these resistances have been tapped and is holding price. Now that's what, a 70-80 pip pullback right here from Asian highs. Ooh. Go on, golds. Give us a bit of a push up. I'm thinking about a break of this 50-minute high, or even a wick fill. Even a wick fill. I want to get in on the next 15-minute, but I need a stop loss that makes sense. Facts. Facts, facts, facts. Our new 15 minutes about to open, but this is leaving a wick. I don't know about the buyers just here, just because we've tapped into this 4-hour resistance. That's what's making me a bit cautious about the buyers. Ooh, if I get a decent bottom wick, I kind of just want at least a wick fill. You know? Come on, Goldie, what are we trying to do here? Just, all I needed was a little bottom wick. That's it. Just a little bottom wick that I could have got in on this 15-minute wick fill. Gold ain't rocking with me these days, man. What's good, Goldie? Come on now, baby. Alright, so we're tapping into this resistance again. Might get a bit of a drive down to make a bottom wick. Let's clean it up a little bit in here since we busted past that. What a candle though. Now this is a news candle. Some news candles ain't been like this these days, man. 300 pips, 290. Let's go. I like it, I like it, I like it. All right, we're making a 15-minute bottom wick. Are we coming back for that? Little drive down. Didn't quite get there. Come on, gold. Let's see if we can push past Asian highs. If I do, let's make a little box here. If we can close above Asian highs, I'm definitely taking buys on the next candle. So listen out for Jerome saying stuff like, if he says stuff like, you know, the markets or the economy's looking good and we've still got room to further cut rates, or if he talks about inflation easing, then I think we're going to get more of a push, a continued push, because that would mean that we're on line to continue cutting rates. If he says, you know, they can't reduce rates at the same pace, or they're going to have to slow down, or stuff like inflation is still too high, and they're not done with the monetary policy right now, with the tightening, then we're going to see the sales back down. Because I think there's another rate cut due in January. It's like every 6 to 8 weeks, but I believe there is one in January. Non-farms on the 9th. Yeah, look, January the 28th, end of January, another Fed's decision. So that'll be interesting. End of the month. Ooh. I was thinking to scalp this 15-minute bottom wick, but it kept on coming down and then pushing back up, coming down and pushing back up. And then when it flipped, I was looking at Forex Factory. That's a very quick scalp. But I'm still with the buyers. Still like the buyers, to be honest. Dude, that would have been nice. That would have been nice. That would have been nice. Little 40 pips. Let's see what crypto's doing. Nothing much. It's been slowly trickling back up, very slowly. And GJ's pushing up too, I think I saw. Yep. Break and retest. Break and retest. Looks like it, right? But let me move this over here. And then what we can do, hey, I won't do it just yet. I won't do it just yet. Well, that's what we're gonna do. Yeah, I like that. I like that. I like that. Shit, my bad. Damn. Gold. Talk about a bottom wick. I'm telling you, man, I'll be calling these trades and don't take them. It's crazy. It's actually crazy. Retrace that whole move, yo. But it's what gold has been doing at these 4-hour resistances or 4-hour supports. Every time it's come up to 42.19, 42.17, it's had these big pullbacks. Look, sold, you know? Let's see what JP is gonna say now. Now we just wait. This one right here. Where's the music? Still gonna have some background music though. Jay Pizzle, talk to us.
Focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate.
You could tell he wears
More
fake
to say
teeth.
about monetary policy and its implementation
His mouth.
after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are
So
delayed,
economy's looking good.
available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022.
Okay, so unemployment
but
going down,
remains
good.
somewhat elevated relative to our 2% longer-run goal. Very little data on inflation have been released since our meeting in October.
Oh, so inflation is still too
Total
high.
PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing
Bro,
for
this
services.
is not moving how it's supposed to be.
Near-term
This is
measures
where
of
we're at
inflation
right now.
expectations have
That's
declined
good.
from their peaks
wonder.
earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September.
We caught up.
Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a quarter percentage point. With today's decision, we have lowered our policy rate 3/4 of a percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of
So maybe
plausible
holding rates.
estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September. As is always the case, these individual forecasts are subject to uncertainty and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy.
Here we go.
In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time.
All right, JP. So basically, they're still going to be reducing rates, just not at a crazy fast pace, but they're still going to take it meeting by meeting. Unfortunately, we don't have like a solid direction for where gold is going. Still inside this lovely range. So no trades on gold on stream today. So that sucks. But I will see you guys tomorrow. Back in NY, usual time. Peace out.